Hello. The company being analyzed today is Cybertech Systems and Software Limited. As the name suggests, this is a software company, okay? Particularly a software solutions company. So it helps many other companies to implement certain kinds of software better. But today, we will not discuss what the company is doing. Today, we will only discuss the financials of the company. So let's start. We will analyze the revenue, profits, balance sheet, and the cash flows of the company. So first, market cap 547 crores. This is a small cap company. Current price of one share is 176 rupees. The book value per share, that is net assets. Okay, book value is equity, assets minus the liabilities. So 79 rupees. Return on equity, very important statistic. 14.9% is a decent return on equity, not the best for, let's say, software company. Return on capital employed is 19.4%, and we have a stock price to earnings ratio of 15.3. Then we have a dividend yield 2.3%. So the dividends paid out last year were 2.3% of 176 rupees. And the company announced that the company's board, I believe, approved or sanctioned a special 20 rupee dividend. Yes, per share 20 rupee dividend. So big, 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 big. Now, the profit and loss of the company, we got figures from 2014 all the way to 2025. We will go to the right now. Here we have sales. You can see sales. You can see the third line being operating profit. You can see operating profit margin and and other income. This is extremely important, okay, for this company. Pay attention to the line below the percentage, okay? Below operating profit margins, we have this other income. It's going to be significant. In 2014, we have sales of 68 crore rupees. Okay, we move forward. Let's go all the way to 2020. We have sales of 113 crores. We move forward. 176 crores of sales in 2023. Okay, then let's go all the way to 2025. Here we have sales of 236 crores. We have an operating profit of 32 crores, operating profit margin of 13%. See this operating profit margin, 13%. It has fluctuated. It reached a high of 20%, then went down all the way to 2024's 12%. Maybe it can rebound from 12%, but operating profit, at least that shows this year, 32 crores. And below that, 13%, you see this 20 crores, this is other income. This is income for the company from non-operating sources. So this means this is not income which came from, let's say, selling goods, selling services, selling software solutions, especially for this company. It came from stuff like interest that the company received on deposits it made in the bank. Or, for example, maybe the company bought some mutual fund units, it invested in mutual funds at some fast, and this year it sold those mutual funds at a gain. So it sold those investments at a gain. That gain will be recognized as other income. As it can be seen, other income 20 crores is significant. Look at this. 32 crores of operating profit, 20 crores of other income. So like more than 50%, like 60% of almost 60%, more than 50% of operating profit, we have other income. Okay. Then we have net profit of finally 35 crores for the company. 35 crores of net profit for this year. In percentages, we can see the growth in percentages. So first we have compounded sales growth of 14% over the last 10 years. Last 5 years, compounded sales growth of 16%. Last 3 years, 19%. TTM is trailing 12 months. So the previous 12 months, okay, the last 12 months, not the last year, but the last 12 months, 5% sales growth. Compounded profit growth has been very, very nice, 48% over the last 10 years, 22% over the last 5 years, 16% over the last 3 years, and TTM, trailing 12 months, 44%. Last 12 months profit growth has been 44%. Now, this massive profit growth, again, first of all, sales numbers over a longer period of time, let's say the last 10 years is a nice period of time, the company has produced some solid sales growth. Profit growth is very high. And part of this is because the company's operating profit. The company has genuinely made more money. A part of this is also other income. Okay, these figures are being compared to this year's figures. Okay, the past year's figures are compared to this year's figures. Other income, non-operating income has also risen for the company because the company has a lot of deposits with the bank, a lot of investments in mutual funds and other kind of ETFs and all that. So that has also partly contributed to such high profit growth. So keep in mind of that, that these numbers does not just mean company operations have grown so much more profitable, other income has also grown. So return on equity has remained stable over the last 10 years. 14% 10 years ago, last year 14% again. Okay. Free cash flow. We're pressing on cash flow. Yes, let's go. Cash flows. Okay. Pretty good cash flows. Again, other operating income have also contributed to this. So keep in mind of that. Okay. Not other operating income. Other income has also contributed to cash flows. So cash from operating activity was 7 crores in 2018. Massive dip in 2015. Then 2021, let's go. 23 crores. Okay, nice increase. 23 crores, all the way 23 crores. Then 2016, 2023, 2022, 26 crores, 26 crores. 2024, massive rise, 37 crores. And 2025, 38 crores. So last few years, we have seen a pretty consistent rise in cash flows, and they have reached 38 crores. So the company is at least cash flow positive company. The 38 crores of operating cash flow, it's very debt free, very debt light, not a lot of interest, not a lot of depreciation. So 38 crores of operating cash flow, free cash flow of the company will be pretty close to this figure, maybe. And the current market cap of 547 crores, maybe the company has a decent free cash flow value. Okay, these were the revenues for the company, and free cash flow is one of the most important statistics or measures in valuing companies. Time to value the balance sheet. So this is the balance sheet of the company. Okay, today we will only analyze the balance sheet and all that stuff. We have analyzed the cash flows, taken a look at the cash flows. Taken is the better word, not analyze. And in the next segment, we will analyze what the company actually does, its services, the market it is in, and its outlook. So do await for the second part coming soon. So we have the balance sheet. Now these numbers are in lakhs of rupees, okay? So we can convert them to crores, decimal points, two times to the left, okay? So property, plant, equipment, 20 crores only. 20 crores of property, plant, and equipment. Okay, okay. Look at this. The company has investments worth of 130 crore rupees. So market cap of 580 crores, 130 crores worth of investments. Cash and cash equivalents, okay? 22 crores of cash and cash equivalents. Other balances with the bank, 60 crores, okay? Giving it a total current assets which can be liquidated within the next 12 months, 259 crores. So current assets dominate. The company is a software company, so it really doesn't have a lot of, you can see, fixed assets like property, plant, equipment, and all of that. Current assets, massive. Now remember this figure, current assets, 259 crores. Keep in mind that you're going to go to, first of all, okay, equity, you can see equity, other equity, total equity of 247 crores. Remember, 250 crores of current liability, current assets. Compare this to current liabilities, only 50 crores. So its current liabilities, debt it has to pay back, money it has to pay back within 1 year is way less than its cash balance, way less than the assets that it has. So basically, a very healthy balance sheet. The one thing we can say about the company, it has a very, very healthy balance sheet. You can pause and take a look at for non-current liabilities. So money it has to pay back in after 12 months, after 12 months time. But very healthy balance sheet, a lot of cash. Let's dive a bit deeper into the balance sheet. Hold up. Yes. Where is it? Where is it? Yes. Investments current. Okay. investments current, we will take a look at the investments of the company. Where has it actually invested in it? Now, many things, but look at this. US Treasury bills. The company has 88 crores worth of US Treasury bills. The company gets 99% of its revenue from the US. Okay, its clients are US. 99% of its revenue comes from the US, and it has very high top client concentration risk. Its top client contributes, I think, more than 50% of its revenue. If I'm correct, top client contributes from the 50%, and 99% of the revenue comes from the US. What the company actually does, again, we will discuss this in the next segment. But 88 crores worth of US Treasury bills. Look at this. Vanguard Total World Stock ETF, an exchange traded fund. It has invested 12.6 crores. It has this much money in it. Then this was page 171. Uh, Hold up. This is page 172. Acha, this is okay. We discussed this. Then cash, cash. Okay, cash and cash equivalents. This is bank balances with bank in the current accounts. You got 22 crores, and cash on hand 1.14 lakh rupees. So cash on hand is only 1.14 lakh rupees, but money in banks in current accounts, so they can withdraw anytime they want. Current accounts 22 crores. Other balances with bank, we got fixed deposit accounts. Deposits with maturity of more than 3 months but less than 12 months. So current, till current, 60 crores worth of deposits. And you see this asterisk, fixed deposit accounts, they have explained this asterisk. This 60 crores actually includes fixed deposits with banks held as margin money. What is margin money? Basically, money held by the bank. Okay, so some of this cash will be restricted. Some of this cash the company is not allowed to just take away. Why? Because it held as margin money. Basically, the bank is holding this cash as collateral, security collateral for maybe some obligation of Cybertech systems. Maybe Cybertech system took some short-term loan from the bank, overdraft facility from the bank, whatever they took from the bank, financial something from the bank. So they're holding this as collateral in case they don't pay. So security collateral. Like we take a home loan. So the loan, home acts as a collateral security. If you can't pay, the bank will then take the home, liquidate the home, sell the home to get back their money. Same like that. Margin money uh, held as collateral, held as security collateral for the bank, acts as a guarantee for the bank that they get back their money. Okay. But still, it said it includes, so not all the money, but some of the money, a portion of the money, the 60 crores, will be that. Okay, that's it. That's it. That was all. Okay. So very healthy balance sheet. The company has shown good growth. It is profitable. It is cash flow positive, and I think this is it for the segment. In the next segment, we are going to cover what the company is actually doing, who are its clients, which industries it's serving, and at least one thing we can say, at least it is cash flow positive.